This is the CEO of Redfin. Let's hear what she's got to say.
Well, new data on existing home sales for April out today. That number declining for the second straight month to an annual rate of 4.14 million. Yet the median price of an existing home sold rose by 5.7% year over year.
So the home prices have gone up over 5% year over year.
But the number of sales last month actually went down.
That's correct.
So what do you think that is?
I think interest rates are slowing things down a little bit.
And do you think there's an inventory crunch as well? Is that which is directly related to the interest rate, right? Because people who have a 3% interest rate are staying home. They're not selling. So there's less sales, but the properties are becoming more valuable. Right.
What are they going to buy? They're going to sell their house with a 3% interest rate and get into a smaller house if they're downsizing with a 7% interest rate,
right.
Or they're going to try to buy something bigger and they're going to end up paying an astronomical amount every month for their mortgage. So yeah, people are hanging tight. However, we've talked about it on this show before. Housing is a necessity. People need places to live. It doesn't surprise me that home prices are up over 5% in the last 12 months.
So it's supply and demand, basically. It's like there's not as many homes on the market, so they're more valuable, and there's less sales because there's not as many homes on the market. We should be the CEOs of Redfin.
I bet you we would probably do a better job. If they can get the interest rates to come down just a smidge, I think they're going to stimulate the real estate market a little bit more. But we're fighting inflation here.
I also want to comment on the interest rates because I think people's expectations are way off these days. I mean, we got spoiled right before rates went up with like 2 and 3% interest rates, but that is not the average. I mean, like the 17-year average is a 5% rate. I mean, that's what rates have been, right? I mean, there's peaks and valleys, but a 3% interest rate is way below market, right? So if you're sitting around waiting for a 3% again, I mean, keep waiting, right? Because that's happened twice since like 2000. 4.5 is actually amazing. Five is your average, right?
I think it's a healthy, balanced market for both buyers and sellers.
Right. So when I hear people like, 3%, forget about 3%. That's not even realistic. No one makes any money at 3%. The bank doesn't want to give you money for 3%. They're not going to do it.
It'll never happen again.
Right. If we get back to a 5, we're doing amazing. And based on where we are today, like in the 7s, if we get to a 6 or a 5.99, that's a deal. Time to buy, in my opinion.
Time to buy. So Sam, as one of the top lenders in the state of Nevada, is this what you're seeing right here? 7.0.
Well, these are, I mean, rates fluctuate every day. I have been able to do a few deals lately at slightly under 7 in the high 6s. I mean, there's a lot of components there. There's your credit score, the price of the house, how much you're putting down. So, rates are going to vary for every transaction, but they're generally in this area. Slightly over 7 or slightly under 7.
And you can buy down the rate if you wanted to.
You can buy down the rate. There's other things you can do as well, right? There's these temporary buy downs that sound confusing, but they're really not. A seller's trying to sell his home. He's dealing with various buyers, and they all have the same complaint as the interest rate, right? So if that seller really wants to sell their house, ask them for a seller concession. And instead of applying that seller concession to your closing cost, do a temporary buy down. You can actually make that 7.02 rate 5.02 for the next year and 6.02 for the next year after that. So you're buying down 2% for 1 year, 1% for the year after that. And the idea in that strategy is that you're waiting out these high rates and you'll refinance before your rate goes back to 7.02. Yeah.
Great advice.
It is really expensive to try to get a mortgage at a 7% rate compared to their current rate. 90% of them are under 6.
So this is what we were talking about, the supply and demand, right? So basically 2/3 of the market bought, when rates were lower, and they're under
4%.
Right, 3-4%. So they're not getting back in the game, right? So there's no houses to buy.
Yeah, Sam, are we mind readers? I have not watched this episode, or I've not watched this.
I told you, bro, we need to run Redfin.
We are literally beating her to the punch.
Right. I don't even think I'd want to run Redfin. It sounds like too much work. I'd rather just do this show.
Let's just entertain the housing hooligans, man. Like that's what
housing
it's all
hooligans.
About. Like,
we're here for you. This is way more fun.
Yeah, we got you.
Grab a cocktail
and ladies.
Yeah, watch the housing hangout.
Yeah, we definitely drink at work.
Now's the perfect time to subscribe.